Please note, this session is being recorded.
All right, hello and welcome to the Trusted Podcast. I'm your host, Blake Johnson, and today we're going to be talking about real estate, about investing in real estate, and also if you need to sell a house quickly and do it without having to pay the realtor's fees. So I've got a great guest today. I've got Carl Bassett. He's a franchisee with HomeVestors. So Carl, welcome to the show.
Thank you for having me. Appreciate it, Blake.
All right, well let's jump right in. Give me a little bit of your background. About how you got started in the real estate market, and then also talk to me about HomeVestors and your company and kind of what makes you guys the experts in your field as far as purchasing real estate as well as in doing helping people on the investing side.
Okay, so I was a real estate appraiser and came down to Vegas in 2003. So beginning, we were deep into an upward swing, but I was an appraiser, came down here and ended up, kind of making it my home and licensed out as an appraiser. And while I did that, during that process, I worked with multiple hedge funds. So toward the end, in about starting in about 2010, a few of the big hedge funds would contact me and have me go through lists that were available at the auction. I'd come up with value. I think it's valued here, and it was just having another set of eyes look at it, and it really intrigued me. Now I started flipping houses. I flipped my first home in '99, so I've been flipping homes for a little while. I was pretty young, but I really enjoyed that concept, and I would flip at least one house a year as an appraiser. And then it got to the point where I was flipping more and more. My E&O insurance basically approached me and said, we're going to drop you because you're considered a risk because you're flipping houses. And so, I decided, okay, so I slowed it down just a little bit, and then I looked for an opportunity to do this full time, and I found this HomeVestors brand. And with HomeVestors, the largest national company, but I own the Las Vegas rights to that company. So to be able to market myself as HomeVestors here in Las Vegas.
Okay, and talk to me about HomeVestors. What's what they do and what kind of their philosophy is.
So there's 1,100 independent franchises plus across the United States. So every major market, mid-major market, and then a few of the smaller ones across the country. And what they do is, and they're the original iBuyer, so to speak. They're the original discount home buyer. They kind of created the space. Zillow, Open Door, OfferPad have kind of borrowed in. In fact, a lot of those guys are from the HomeVestor network originally, kind of knockoffs or different versions or variations of it. And so what happens is they go and market for me. So I place TV, I place heavy online. We do. To kind of give you an idea, in a typical month, we'll do collectively, there's 13 offices in Las Vegas. I'm one of those 13. So collectively, we'll spend about $180,000 a month in advertising. Heavy TV, heavy online. We send about 180,000 letters a month. There's a scientific method or way that we do it, and send all that out. And then people contact us directly. And they say, hey, I'm interested in selling my home. And it might be damaged, it might be need repair, it might just be kind of an ugly situation, because it's the we buy ugly houses guys, right? So the ugly situation could be in a divorce or two fighting parties and they just need a cash offer and to get this done fast. Could be estate is a common one. Could be just disrepair and they're ready to move to a different home. So but they contact us direct, we give them an offer and they accept it or reject it.
Okay.
But it's my marketing arm.
Yeah, gotcha. Okay, and then I guess the thing that makes it so nice is you have cash offers, so you close quickly, and there's no realtors involved, and you guys pay closing costs most of the time. Is that correct?
Yeah. So we'll pay their closing costs and our closing costs. Pay both. I think the biggest difference is that the amount of flexibility. Someone says, "Hey, I need to sell my home before I buy my next home." No problem. We'll buy it. You can sit in it, stay in it. You can. It is the amount of flexibility that we can give someone. Hey, I don't want to do any repairs, or I know that I have mold in my home, or I know I have a roof problem, or it's not going to get a loan. That's fine. We're cash. We can come in and do it. And
Gotcha.
speed.
Okay.
We do it in 7 days. So speed is another major reason why someone would go with us.
Okay. Yeah, and before we started recording, you were telling me, difference between you and some of the other big buyers out there is, you have multiple financing sources. So, with this coronavirus shutting people down and banks not lending, you guys are still out buying because you have different financing arms out there, right?
Yeah, we use a lot of. So I do have credit lines like the big guys. A lot of the biggest players out there use like Goldman Sachs credit lines. I also have credit lines for some big national players. A lot of those have serious limitations to them right now. I can use them, but there's strong limitations. However, I guess what probably makes me different is that we use a lot of private money. So local money guys here in Las Vegas or around the country will lend money and just secure it to the property. So I've got over 10 million still available to me to be able to buy. So we're still up in operation.
Okay. I think that's something that definitely is appealing and sets you apart is, the flexibility with not only the terms, but also being able to continue to operate when everybody else is shut down. So that's pretty awesome that you've done that. Now, what are some big mistakes that you see people make when they are trying to first start investing in real estate? Because you've been around and you've been doing this for a while, so I know you mentor a lot of people. What are the mistakes you see people make most often, and the biggest mistakes?
All right. So the number one mistake that people make is that when they are, so right now today in this market, now Corona aside, let's just say in 2016 it stopped being a rental market in Las Vegas. If you're buying local rental properties in Las Vegas, smart money moved out, dumb money moved in. So there are people that are parking money, meaning they're parking funds because they've got it rolling out of something else. They're kind of a little different scenario, but most of the time it's not a rental market right here. Now, there are other parts of the country that still make sense as a rental, but quite honestly, we don't really make sense as a rental. So I see that pretty common. Someone says, okay, I'm going to go buy these 32 houses. That's great, but what's your strategy? Because you're buying at the peak and the cash flow doesn't really work, and it doesn't make for a phenomenal investment today. Things are going to change. Maybe even later this year they're going to change, but so buying rentals when they shouldn't be buying rentals, or being just emotional. People want they want to live in the spot where they buy their investment property. It rarely works. I mean, if you got to buy in a blue collar market, it's just that's where real estate makes sense. It does not make sense to buy in a luxury market, not on a cash flow basis, not on an appreciation basis. And so they buy where they want to show their friends that they own the home, but they don't buy where they could make the money and get the return that's you want in buying real estate.
Something I've heard many times is, you make your profit and the deal has to make sense on the purchase side and not on the exit. So you're not hoping for, the appreciation and whatnot. I'm guessing that's been your experience, and can you elaborate on that a little bit?
Yeah. So I mean, you just have to they just have to understand sound principles, and understand what the strategy is. There's different strategies to go in, but on the same note, you got to have a strategy. You can't just buy just to buy. So it's possible to, and I apologize, Blake, but I just got the warning of low battery. I'm sorry. Sorry about the timing of that. I can quickly do this, but if I don't, I'm at 3%. Sorry.
That's okay. We'd rather not lose you, so it's all good.
Yeah, sorry. Bad timing. Should have saw that before. Okay, there we go. So go ahead. Ask the question again. I apologize.
No, I forgot it. I think we were talking about strategy and buying, making sense of the deal, it needs to make money from the beginning and not just bank on appreciation or something like that.
I agree. So to me, if they want to buy in Las Vegas, totally different story if you want to buy in a different area. If you want to buy in Las Vegas, to me, there are deals that are going to happen mid to late summer to the end of the year and potentially within the next year and a half. Just because at the end of the day, we have 355,000 people that work in tourism. And what's not included that is 167,000 people that work in retail. Well, about a third of those retail jobs are on the boulevard. You would argue that's tourism, would you not? I mean, so you're almost 500,000, 400 plus or somewhere around there that are at least significantly related to tourism. And if tourism is going to have massive changes, someone being able to buy an investment property, the opportunities are going to be big. So I'd recommend that they pay down, they buy something at or below the median. In fact, the sweet spot's about 90% of the median. So right now we're 316,000. So they should be looking for something at about 300,000. Likely that's not in their current neighborhood. You know what I mean? Take a step in a different direction. And you want an area that's growing, that's good. And then so you're after cash flow, but you really want to be able to have enough cash flow because interest rates are so low right now that if you can pay a little bit more for it, and because of the interest rates low, you'll be able to pay it down more aggressively. You're just paying less in interest, right? So there's still a good play on that. Hold it for 5 years. Maybe you hold it for 15 and pay it off. After about 3 years, you should switch to a 15-year payment. After you've done rental increases and we're through all this, we should be able to get enough rental increase to where maybe you're not cash flowing a lot of money, but you're paying that 15-year payment and you're going to get it done. And then later at about the 7 to 8 year mark, you should be going to a 12-year payment, and then you get to 12, et cetera, and you're just scaling it back. And having 2 or 3 properties like that, I think makes a lot of sense. Just makes a lot of sense. So Vegas long term is phenomenal.
When should somebody start considering making their investments in real estate? I mean, what kind of check marks should they hit in your mind before they are ready to make that leap and start doing that real investing? Secure income. I wouldn't use, you're using income that, so you're going to go in and qualify for this loan, and make sure that you can afford it, right? That you don't have to make an emotional decision. You end up turning around and have to make an emotional decision because you need that extra $400 a month or whatever. It's not the right time. If they've got a few dollars to put in, I think it's a great deal. I think that patience is the key. And then the number one thing, do not manage it on your own. None of my properties that are managed, none of these people have my cell phone. None of them call me at Christmas time saying, unfortunately so-and-so broke their leg or whatever, because you'll get all those stories. Management companies, professionally managed companies are good. The second thing is, on that is that you just set it and leave it. Put the payment on auto, have it come in and just set it and leave it. Have about 3 months reserve sitting in there, and then probably about $5,000 for repair allowance, and then just set it and leave it, and don't worry about it and let it pay itself off. And every once in a while you will have to come clean it up. But big property managers, don't get some with 18 properties, get some with 400 plus. Because big property managers will do all the repairs for you. In fact, if it falls under $1,000, just show me the invoice. I don't even want to hear about it. I don't need a call Saturday morning to say the hot water heater went out. Just replace it. It's under $1,000. I don't need to worry about it. And these big companies will do it all for you. And certain properties, I haven't heard from my management company in 3 years besides email and statements. And that's how you want it. The idea, if you're managing this on a monthly basis, you will burn out and you will hate it. And trying to save 8%, that really is what you're going to save, 8 to 10% of that income amount. You're roughly on a $1,500, you know what I mean? You're trying to save $120 to $150, but you will do more damage to the property than the tenant. So when people have their nightmare stories, it's because they don't know how to property manage, and just get a big company to do it all for you. This is a set it and leave it. It's like putting in a mutual fund and just let it, you want it 10 years from now. You don't want it today. So just set it and leave it. Yeah. If you need the income now, it's probably not the right time, because you're gonna be looking at that account, pulling it out. It's one of those things where it just has to grow and accumulate. And you basically have to afford to be able to say, all right, if nothing comes in, like I'm still good. It's still it's gonna take care of itself. And kind of have that mindset of it's spent, it's gone, I don't have it. And then when you go to get it in 10 years, it's great. You have all this extra income and principal essentially.
Yeah, that's great. So right now you're really only going to make $200 to $300 a month. That's it. And every once in a while you're going to have to recarpet, repaint, etc. So it's not a gigantic money maker in the first 5 years. It just isn't. You get rental increases. You're fixed on your rate. You should get at least a 10-year fix, just because the rates are so historically low. So you kind of crazy not to just go ahead and pay to fix it, and then leave it there for 10 years. And by the end, in that year 6, 7, 8, 9, 10, now you're aggressively paying down that debt. And if you ever were in a spot where you needed it, now you'd have $600-700 in cash flow from the property. Mm-hmm. Just get it aggressively paid down. You could always refinance. Now you're going to owe a third of it by then, and so you could aggressively or refinance it and take out $1,000 a month, something like that. But the goal is just to get the thing paid off.
Okay. All right. So the way you and I met was, obviously being an estate attorney, I do help with probates and stuff. So when you're going around buying, and people are trying to sell the house, many times it's mom and dad's house or brother sister's house who's passed away, and they're trying to sell it. So walk me through from an investment standpoint why that's a great opportunity, and then we can talk about the steps of how we are able to help you get that bought from the probate side of things.
All right. So to me, there's two things that surprise me, I guess, in getting into this. One is, we sit down with people all the time that say, well, I live in the home. My mom passed away. Mom and dad are gone, right? I live in the home. And, well, I have this sister, but don't worry about her. It's just me that's going to sell the home. And we're like, yeah, it doesn't work that way. No, she doesn't care. It's fine. We hear this monthly. And we're like, laws don't work that way. We have, in the state of Nevada, we have to, any state, honestly, you have to follow through, and a judge has to look at it. And so the first is the average person is extremely naive to, they just assume mom dies and it's mine, or they last second quit claimed it, the week before, kind of a thing, and they expect that to stick. And so we find that's one major thing. And of course, we're either dead ended because they need to sell this home, or we get someone in probate, right, and hire an attorney. The second thing that kind of surprised me is that when I first got in, we would say, okay, do you have a family attorney? Who do you recommend? Oh, I know so-and-so that does it. And it shocked me with the varying levels of, some attorneys can take 1 year to do probate, and some attorneys can do it in 3 months. And for what seems like the exact same scenario can cost, $15,000. It could cost $25,000. It can cost $5,000, $8,000, $7,000. And I know every case is different because there's a lot of variables that go into it. However, we needed someone we could count on. We needed someone that we could trust, because a lot of times I'm paying probate, and I get it when we've had some we've sent you that have had like 9 siblings. I get it that those are expensive. They're complicated. There's a lot of legal issues that are going on. But on the same note, at least I know that it's being done efficiently, and that's been my thing. Being able to have someone break it down and explain it to people and not make them feel little, meaning our sellers. And the second thing is just having someone consistently try to get this through and not jack this up to have it last a year when it doesn't need to last a year. It's painful for the seller. It's painful for the buyer.
Yeah, and I'll explain it from the attorney perspective. They want it to drag on as long as possible, and they want it to go through the traditional selling process, which is we list it for sale. Let's say, a naive buyer comes in thinking, I'm going to get this as an investment. They're offering it a great deal. Well, guess what? Once you do that, if it's done the traditional way through probate court, it has to go back and be put up for auction by the judge. And so, other buyers that have way more money than you do are going to come in, they're going to purchase that, and they're even willing to lose money on it because they want to keep that market. And so you'll lose that deal. And then that drags out longer and longer because, that's that's just the way it is, and the attorneys love that because they usually typically charge by the hour. And so the system that we've created, and I think why we work so well is, we want to be creative and entrepreneurial with this, is we found a system where I've built a relationship with the judge where I can get these through probate without having to do the auction. We give it to the actual heirs, so amongst all the siblings, and then they sell it to you as the buyer, and so that way we don't have to go through that auction process. So it helps streamline things. And then the other thing is, we charge a flat fee now, so that way, you can factor that into your purchase price to know exactly what it's going to cost. So we've done enough of these that we know what the price is going to be, and so we help stabilize and make that more predictable for the investment side of things.
Makes all the difference in the world on our side, because it's the consistency that we have, and then so I probably had probate done where I paid it. Now remember, I've been the buyer. I've never done a probate as the seller, but as the buyer, I've probably done close to 100, and where I paid for it, and I've helped walk them through this process to help them through it, and it was a disaster at the beginning. I mean, our first probably 4 years in business, it was just a disaster till we ran into it. It was so inconsistent. And sellers a lot of times would quit and just say, I'm just going to live here until the government kicks me out.
Right.
And I'm seriously, it was so common that people would just quit in that process. And so now we feel like there's good expectations, and that's probably what your best trade on is, good expectations, helping people through the process, that we can't skip steps. The process is the process, but explaining it enough to where they understand. So when we call them and follow up with them on a weekly or monthly basis while they're going through that process, they're happy. Okay, we're waiting on this, that they know the next step, and that seems to make all the difference. So that we're real appreciative of.
Well, thank you. Yeah, no, it's unfortunate. I mean, in the ideal situation, this is my shout out and plug for myself, is do the estate planning ahead of time and avoid the probate court. That's the easiest way to get stuff done. But if not, then yeah, we can help minimize the cost and the time frame by not doing the auction process, because the auction process adds at least 2 months to the end of whatever your probate timeline is, if not longer. So yeah, any way we can avoid
and
that.
And a good amount of cost. If you just look at what goes net in the seller's pocket, not paying the commissions, not paying all the closing costs, not having exorbitant attorney fees, at the end of the day, they likely make more money with me. You can never say it all the way through. It'd have to go through, but more than not, they would make more money going through that process with me in that streamline, just because their purchase price potentially could be higher, but all those deductions that come down, the net that goes in their pocket is likely similar or better with considerably less pain. So.
Right. Yeah, no, it is. It's one of those like sticker pricing. Oh, I sold it for this amount. Okay, but it really comes down to what did you keep, what's in your pocket, because if you have a higher price, that means there's percentage of that higher price is going to be bigger that they're going to take out, and sometimes attorneys, especially if the property's worth a ton, they can take a percentage of the estate as well instead of just doing it by the hour. And that state mandated what those percentages are, but it can be, up to, it's 4% of the first 15 grand, 3% up to 200,000, and then 2% of everything above that. That's a lot that goes just into the attorney's pocket. On top of, they also get to charge you all the fees they file with the court and everything else on top of that. So it can add up quickly.
Yeah. Well, and that's out of their pocket. A lot of times we'll set it up to where I can actually pay it at closing, and you work with us on it. So one of the big things is, let's say that I feel like I'm in this situation, sitting in someone's living room. There's 3 siblings, and the 3 siblings say, okay, and maybe 2 of them are there, one of them lives out of state. It's common, right? And so they say, okay, we don't have any money to repair this. Oh, by the way, we don't have any money to do the probate. Or they say, well, how much does that cost? And they're hoping it's like $500. And you're like, it's not. It's just, this is a really lengthy process with a law firm. This isn't something that's just a court document we fill out and sign. This is something that's serious. And so we start to explain these costs, and they immediately think the repairs are going to be over $20,000. The attorney fees are going to be 10 or whatever, and they start moving in that direction. It ends up being a bad spot. So we'll say, nope, sell it as is, even if it's damaged, badly damaged. Leave whatever you want, and it just makes it simple. Take what's valuable to you, leave the rest. You don't have to come out here for 4 days straight cleaning mom's house out. And then we're going to pay for the probate. I'll pay for all the costs and expenses all the way through. And so that there's not an easier way to sell your home in that scenario, easily.
Yeah, and I'll vouch for you that it is. It's been super nice from my side of clients that, typically the kids are out of state. Mom and dad lived here, passed away. They just want to get rid of the house. And so we hook them up with you and say, all right, here you go. They'll take care of it. The client doesn't even have to show up. They don't have to even clean out the house, and they love that aspect of it. So, from my end, it was just as helpful. So that's why I think we work well as a team. Okay. All right. So how can people, let's say, I know HomeVestors is nationwide, but even within HomeVestors, I'm sure there's good buyers and bad buyers. So what are some red flags or things that people should be looking for when they're trying to sell their home, and they can't necessarily use you for it?
So trying to sell your home, I think there's a lot of guys that are middlemen. They don't really buy houses, meaning they assign the deal to someone else. And those middlemen go out there and say, can I buy your home? Let's get a contract. As soon as you sign that contract, they're going to turn around and assign that deal with a document, an addendum to the contract, to another investor, a third party. Problem is you don't know who that is. You don't know if they can close. What if they don't close at the last second? What if they don't agree to all the terms? I mean, they're technically bound by it, but on the same note, they're going to try to renegotiate in that 11th hour at the last minute. And that's more common than not in Nevada. And it's because, think of it, on the boulevard, do you not hear on the radio all the time, buy with zero money down, come show up to this conference and we'll teach you how to buy with no money down. They're teaching those people to be that middleman. And so that actually represents the majority, not the minority. The minority is actually guys like me that actually physically are cash buyers legitimately that buy the houses. And so I think you want to find someone to buy. So the first thing I would recommend to someone is, no matter where you're at in the U.S., is what is the name of your entity? They tell you, okay, go online, look it up, because at the end of the day, and for example, in Nevada, you could see, if you were to go on and look at my entity, you'd see that I own a large number, there'd be 50 plus properties in that. My rentals, of course, wouldn't be held in that flipping entity, but you would be able to see my inventory currently, and you could even type in the last 2 years, how many properties has this guy owned? How many has he sold? That would tell you that's the scoreboard. And so at the end of the day, it doesn't matter what argument's going on in the game. The scoreboard is what counts. That's the scoreboard. So if you want to find someone that's a legitimate player, the scoreboard is going to be how many homes they own currently, how many homes they've been selling, etc. If they are a player, that's the only way you're going to know. And the second route, I guess, I'd recommend is potentially having them show proof of funds. So they can maybe show you a credit line letter. They could maybe show you a bank account, and they could pull that up on their phone. If someone asked me, I need to see that, I wouldn't have to say, well, let me go to my office. I would have it. And I would be able to pull up in my email, because first off, it would be asked from me frequently. And second, I really could we all know that there's banking apps. And so I really could just show them my banking app. To be able to show the type of transactions that I do. I think that could be easily proved. So those are my recommendations, to not get someone who's not going to close. The iBuyers and most of these little guys, the iBuyers mean the internet buyers, all are bait and switch. They want to buy here, but they give you an offer here. They plan on doing an inspection and charging you fees and costs and commissions and to get it down to this level. And so you've got to find someone that's willing to that your inspections are waived today. In other words, they're standing in your house. Why do they need to come back and inspect it? Do they want it or not? Just waive the inspections and just make it happen. So. Okay.
All right. What about somebody who's looking to find a mentor to help them with starting investing in real estate? What are some things you think a really good mentor or qualities a mentor should have?
Well, the bulk of mentors are these online companies that, I don't want to name any names, but they come into Vegas and they do a convention. I'm telling you, the guys that are teaching and training at this convention live in their parents' basement. They haven't bought real estate before. They have gone through a class like you, and they were real excited and were willing to work for $20 an hour, and so they're now back as being a mentor. And so I'd be very, very careful. There are purchasable coaching, but it's very few and far between that's good. And I know this. There are two of the absolute biggest that are out there. That one of the guys was a coach for 7 years, and then he bought a home investor's office, and he was a disaster. We finally had to cut him. The company actually cut him as a franchisee. So he just couldn't do it. He couldn't cut it, but he also just he was so smooth with people that he wasn't very honest. And so we just caught inconsistency long enough, and we had to get rid of him. So I would recommend, again, go back to the scoreboard. You want someone to be a mentor, you've got to physically see their entity has bought and sold a good number of properties, and then you'll be all right. But the only way to do this is experience, not a degree. I mean, I wish it was a degree. It'd be a lot cheaper. If I could have paid $500,000 to get the education that I've got, it would be far cheaper than where I've actually gone. You know what I mean? I spent far over $1 million getting this education. So, but you have to have someone who's done volume or consistency. Let's say it's not, but they're doing 3-4 a year, and they've consistently got a good track record. That's who you're wanting to go with. Yeah,
and I think the idea is, hey, you're not going to find them online, because if they're actually successful with what they're doing, they're not going to have time to do those courses, because they're making enough off the other stuff and busy enough with it that that's where we need to spend your time. And that's the hard part. I think with the online stuff today is it's so easy to put up an ad and show and make it look like you are, but you can alter documents, you can screenshot, you can whatever from different things. So have somebody that you've worked with that I would say local and then has actually in the trenches and still doing it day by day. I think that's really where it comes down to.
Yeah, I agree. Just the only important scoreboard is their production. Not any other accolade. So
awesome. Well, how can people get a hold of you if they're here in Nevada and selling their homes or have questions about their home?
Okay, so my personal cell phone is 702-328-2243. 702-328-2243. I recommend you text me first. Hey, I'm interested in selling my home. Can I give you a call? And then call. You know that we all get a lot of soliciting, and there's maybe on another call, etc. I think the text headlines it, and then you call. That way you don't have to catch me at the right time. I'll make sure that I make the right time. The second route would be by email, and it's my first name and last name at HomeVestor. So it's Carl, CARL .Bassett, BASSETT @homevestors.com. And I would like to add one caveat on that. If someone wants to do this, or let's say they've got the funds and they want their son to do this or a partner to do this, maybe they've got their own career or whatever going, but they want to start getting rentals, etc. There's 13 franchises right now. 2 of them are up for sale. Both of them health related. They're not bailing. We're all doing well, but they're both health related type scenarios. And so if they are interested in one, they could contact me on that.
Okay, awesome. And I'll make sure I put your email in the show notes so people can reach out to you there. I won't put the cell phones because otherwise you'll get probably blown up with spam stuff. But
yeah.
Okay. Any other thoughts? Anything we missed about real estate that you want to cover?
Well, I think people overlook. I think so many people think you have to invest. Carlton Sheets back in the 80s was so big on this. You have to invest where you live. All of your investment has to be locally. That died in the 2010s and on. I'm telling you that you, as an owner of properties, it's better that you buy the right product in the right area and let it be professionally managed. So, and the more input that you have on the day-to-day operation of that property, the lower the production is going to be of that property. So my recommendation is buy. There are plenty of areas right now. I bought 33 properties in Kansas City so far this year. We're about to launch a big campaign in Florida and buy a number of rentals there. There are other areas in the United States that are phenomenal to rent besides just Las Vegas. So if it's cash flow you want, then there's a certain area. If it's appreciation you want, there's another area. And these are not homes I'm ever going to vacation rental in. I can rent that. If I want that, I'll do that on my own. I can stay in a different hotel. I'm planting seeds that are going to grow into large oak trees, and it's going to be valuable to me. And that's what I'm doing. I'm buying homes that have full intention of paying off in 15 years, and I'll 1031 out or branch that out. So if they're interested, they could also contact me there. There's some opportunities we can partner up on things. But I really feel that the people being scared and having to buy one in their neighborhood is just false. I think that's old information. It doesn't need to be it's not a guideline that needs to be followed anymore.
Okay. Well, Carl, thank you for taking the time and for everything you've shared today. Hopefully everybody's found it pretty valuable. I know I have. As always, everybody, please subscribe to the podcast. That way you get the latest information, and leave us a review. And if you have any questions or topics you think we should cover, definitely reach out to me, and we'll get that taken care of. So, Carl, thank you once again for being on the show today.
Thank you. Thank you for having me, Blake. Appreciate you.
Okay, we'll catch you guys next time.